Hello guys, welcome back to the lovely trading video. In this one we're doing the swing trading recap for August 5th. We're going to go through 2 trades that I'm already in and 2 potential trades that could be coming up either tomorrow or the next few days in case you want to look out for them and maybe trade them yourself. So you'll remember in last swing trading recap we were talking about QCOM. We locked in 50% of the profit because we were already up around 40% on the trade so far. We locked in an extra 2 contracts today, as you can see we kind of came into this same price target and had some struggle. So you'll remember we looked in profits around the 146 area, as this is where the daily median is. Now it's a bit lower, being around 145.50, but we kind of pushed down, as you can see, kind of retested it and faded down again. So we just locked in another 2 contracts here, just so we're out of 70% of the position. We got the last 30% kind of riding, and we locked this in at up around 60%, or was it 59.23%? And now we got 3 left to kind of play with. So we're just gonna play it by having a stop loss all the way kind of in at our entry for the last 3, or we're going to go for our bigger price target of 143, which if we do get, we should hopefully get in the next few days. One thing I will be looking at for though is if we break this low tomorrow and then retest this mid deviation and break through, we will kind of probably just take the trade off because we're already up so much on it. There's no point really letting it run back all the way to 151 if we don't have to. Next trade is Square. This was quite annoying because we were trying to get out of this trade and have it as kind of a small loser today. We were trying to get out as it kind of broke through this 275 area. I think we tried to sell it at 276, but the options just had such wide spreads that it just didn't fill. So it didn't make sense to kind of take a big loss for no reason when we can kind of just manage it how we are. So you'll be able to see that we did actually average into this trade with 1 more contract. You can see we tried to lock it down when we were down around 25-30%, which wasn't too bad compared to the winners, but it just didn't get that fill. So we instead averaged in as it came into this higher deviation, got in 1 more contract for about half price. So now it means that we can actually, when it comes back down to this 275 level, we can get out near break even, probably with a small loss, but it's just a way we can get out of this trade and minimize losses. However, if it comes into this level with strong bearish or a bearish look, I may hold on for longer and turn it into a winner. Kind of just depends on how the stock's feeling, but I didn't like how. Oh, and the reason actually I was trying to get out of it as a loser is, you can see obviously we came up on this big spike under over it's acquiring a Australian buy now pay later company, pulled back to our deviation and bounced off this deviation. The reason we're trying to get out of it as a stop loss is it bouncing off this exact deviation with strong bullish momentum, and that usually means it will continue its uptrend. So now most likely off this deviation we're going to pull back to this 275 level, and that's why we're trying to get we'll get out of the trade most likely at that level, and then we could quite easily see a bounce off this 275 level up to that 300 mark, or at least that's what I'm thinking on the stock. So yeah, most likely going to just take this as a loss to get out on that 275, which won't be too bad because in that whole week period then we've taken 2 big winners and 1 small loser or 1 medium loser. Then if that's all you wanted to see the trades we were in, then that's it. You can click off the video now. I'm going to quickly go over 2 trades that could be coming up this week if you also want to look at them yourselves. The first one being NVDA. We are pushing up as soon as this chart loads, but we are pushing up to this 212, 213 level, where it's coming into basically an all-time high, but also a good short area using standard deviation channels. Yeah, could be a good area to short, which is kind of the level I'll be looking at. The reason I like it as well is it will be at an all-time high. I quite like shorting at all-time highs because, you know, stocks are going to have to pull back at an all-time high. Obviously in the previous case, I believe it broke its all-time high here at 162.20. Obviously it didn't pull back great, and again we could have that same problem here. Don't don't think it would run as long as it did before, but obviously always have that in mind, and that's why you need to be risk managed. So in this kind of trade, I probably will have a not waiting for the pullback kind of to stop it out as we are on square, but instead if it breaks into probably the 218 level, it's probably I would decide to stop out if it hasn't pulled back at all by that level. And then yeah, may re-enter that short at 225. And then yeah, we would have price targets of 201 or 202 will kind of be that first kind of key price profit take, where I would probably take off 50-60% of the position. Otherwise we could maybe be able to ride it down to a 190 area. Obviously the price targets will change depending how long we're in the trade, but those will be the main price targets of around 202 and 200 or 190. Next one is Etsy. This one moved quite strange because it pulled back crazy yesterday. I mean, after hours yesterday, due to the earnings, even though the earnings were relatively good. So it was a bit of an overreaction, and that's why we started to recover today. However, market opened at a low risk entry of 178, as you can see on the daily chart. But obviously option premiums, if you do trade options, you'll know that in the first 30 minutes of the market open, they do tend to have quite wide spreads and can usually be quite expensive. So usually it's good to wait, especially if you're buying options. So that's exactly what we did. Waited until around 10, but obviously by 10 you can see we bounced very heavily off that level, so no longer wanted to trade it. So I will no longer be probably buying this 178 level, and will instead be waiting for it to come down to that 175 to 170 level, as long as that's again not a gap down and it's happening in the first 10 minutes. But yeah, I mean, I guess that's it. And then for profit price targets, 182 to a 195 will kind of be the key areas where I'll be looking to lock in profits, especially if we're not getting in at this 178 level and instead down at 175 to 170. That does provide a good kind of risk to reward, 4% in actual shares, so that will probably be at least 60% in option difference. And when I buy these options, I'm usually looking for kind of around a September, October expiry, because these are most likely going to be quick bounces, and if they're not quick bounces, get out the trade anyway. But that's it for the swing trading recap. Hope you enjoyed. Hope to see you in the next one. And I did upload a day trading one just before this if you want to check that out. And that's it. Peace.
I wanna go, I wanna fly, I wanna take myself